Great, good morning. Welcome along to this week's show. Obviously, I'm not James. James is off this weekend and next week for a well-earned break. So I'll be running through the show today. So we'll start with some news and then we'll get on to talking to our special guest, Gurpreet Google of Atrato On-Site Energy. Not a lot this week, half term and all that, but there's enough for me to be talking about. So we'll talk about Hipgnosis Song, that's the sort of update there. And then JPMorgan Global Growth, and then another merger news from the real estate world. So Hipgnosis first, this is the latest installment in the never-ending circus that seems to be Song at the moment. We all know the story, I think. Discount has widened to almost 55% now, which is crazy. So for this, we need to go back a few months. So the fund, the investment manager, and the founder were being sued by Hipgnosis Music Limited, basically accusing them of stealing the idea and taking it to market basically with launch. With the launch of Song. Now that was news back end of last year. Since then, the board have been looking to get indemnify the company against any liabilities from the investment advisor and Mercuriadis. And this week they announced that they've refused to indemnify the company against the liability. So basically, the company's on the hook, and shareholders effectively on the hook for any claims or anything against the investment company, and yeah, not good news again for shareholders of this company. The board said it intends to bring a High Court claim against the investment advisor to seek full indemnity, but we're not sure what will come of this. So it's another one to keep an eye on there. But more uplifting news for the sector is comes from JPMorgan Global Growth. It's been probably one of the few success stories in the investment trust world over the last sort of 18 months. Invested in the big tech stocks, which have done well and seen its NAV grow up, and yeah, and it's been issuing a lot of capital over the last few months, sort of tens of millions every month. So the demand really is there for its shares, and it's trading at a nice tidy premium as well. So this is its performance. I've ranked this in 5 years, but it's pretty much at the top of every time range amongst its peer group. Invesco is quite small, so probably scrub that off the list so you can see it's really is outperforming the rest of the peer group there. So it's good to see that it successfully raised 34.5 million this week at premium to NAV, and this was prompted by interest from a large UK wealth manager. They didn't name them, but we'll find out soon through its share register who that was. But that's great news, especially considering the consolidation that's going on in the wealth manager world at the moment. And it's really is a vote of confidence in investment trusts, and good to see that good performance is being rewarded. Also, really pleasing to see was the retail offer, which was materially oversubscribed. So yeah, there is demand there for the companies that are doing well, which is good to see. Onto the latest of the merger news in the real estate world. Seems to be not a week goes by when there isn't more news. This week one was a bit surprising actually. So Urban Logistics REIT came in with a merger offer for Aberdeen Property Income. You might remember about 2 or 3 weeks ago, Custodian REIT tabled an offer for API as well, which had both boards approved. So Urban Logistics sort of coming in, trying to sort of upend that deal, I suppose. And it's an indicative bid at the moment, so they haven't put anything formal in yet, and it's for 0.469 shares per every API share. So that valued API shares at about 59.2p at the time on Monday when it was announced. As you'll see in a minute, prices have moved around since then, so everything's moved. So yeah, on the 19th of January, Custodian put in a bid for a merger bid for API exchange of 0.78 shares. At the time, that valued API at 62.1p. But since then, they had I think Andrew McHattie was on a couple of weeks ago talking about how massively their share price dropped after that announcement. And then beginning of this week, when Urban Logistics announced its merger proposal, it dropped. The implied price for API dropped about 52.4p. But since then, things have moved around. As you can see here, this is Shed's share price. After the announcement, it dropped off massively. This is Custodians. Obviously, here you see it dropped off massively after it put in the bid, but then this week spiked up again as Shed's bid came in, and maybe investors thought this was good news, that maybe the API deal was off for them, and it sort of shot up again. But the effect that's had actually is can be seen here. So Custodian's bid now values API more than Urban Logistics bid, with the price movements over the week. But both are still massive discounts to API's NAV. Now they haven't updated their NAV for the end of the year, so this is an estimate of around 78-79p is what we think it is at the moment. So, but that's still a sort of 28 to 30% discount, which is huge, and I'm an API shareholder, still have to take that on board and see they'd like to stomach that really. So what should shareholders do? Well, first of all, let's look at, so both API and Custodian have adjourned their shareholder meetings to give Shed time to do due diligence. They've now been given until 13th of March to make their intentions known on what they're going to do with any offer for API. So, I mean, for shareholders of API, they've just got to consider really what they want. I'm assuming that they bought into API because they like the diversified nature of the portfolio, and if that's the case, then a merger with Custodian would suit the complementary portfolios. I was on the show a few weeks ago when this was initially announced, so you can go back and look at that, about sort of the rationale and things like that, but I've sort of summed it up here. So they both focus on small scale property, diversified between sort of sectors and geography, and they're looking at sort of like the below institutional quality or size stuff where they think they could take advantage of mispricing and things like that. And there's the sort of combined portfolio at the bottom there. So pretty similar to what both are doing at the moment. And it would just be sort of continuity, much more bigger portfolio, about 1 billion, some much bigger scale, cost efficiency and things like that. I was surprised that Custodian's shareholders and their share price came down so much after the initial announcement, because in my mind it's quite a good marriage, and there we go. And then with Urban Logistics and API, not complementary portfolios at all really. API does have, like we just saw, quite a big industrial portfolio and logistics portfolio as well, which obviously Urban Logistics will hang on to, I assume. And but I mean, for API shareholders, it's just whether they want to get into this sort of specialist urban logistics sector and exposure, because as the name says, urban logistics does that, and they do it really well, really well managed. And if you look at their performance, especially over the last sort of three years, they've been very good, and they've really grown rents in this in a tough time over the last year, 18 months, which has sort of offset some of the pain coming through in valuations. What sort of intrigued me about it though was in Shed's announcement was that they were going to look to keep the retail warehousing in from API's portfolio. I mean, retail warehousing is retail parks basically. It's not really warehousing in the same sense that logistics and industrial is. So that obviously are moving away from their sort of specialist thing. So it wouldn't surprise me if they were looking at those assets as a sort of redevelopment play. And obviously, retail parks are located very close to sort of town centres and city centres that they'd be perfect for urban logistics sheds. So that's one interesting point. And they say about 9% of the combined portfolio would fall outside logistics and retail warehousing. So that will give it about sort of 130 million once they sell all that stuff off to grow, maybe to plough into development when the time's right, when the market's right, or maybe to purchase more urban logistics at decent prices as we go forward. So we'll see what happens there. Like I said on the previous slide, shareholder meetings have now been pushed to sort of end of March. So we'll see what comes of that, and we'll see if urban logistics does actually put forward a proposition. Yeah, that's enough from me.